Hi everyone, good morning. You're watching Market Fatafat on ET now. I'm Mubina Kapasi. Markets are in the red. We have a 400-point cut for the Sensex. The Nifty is definitely below the 11,500 mark. In fact, now it's losing a little over 1%. Mid and small caps too in the red. So yes, the losses continue for the benchmarks and the broader markets today in trade as well. But on Market Fatafat, we flag off all those individual stocks that are really causing, the markets to slip the way they are. And to do that, we have with us from ET Now's research team, Soumya and Varun. We are also joined on the technicals by Gaurav Ratnaparki of Sharekhan. So good morning to all of you. Thank you for joining in. And if we have to talk about a key culprit of this stock market fall, it's got to be the PSU banking index. Yesterday it was in the red. Today as well it continues to be in the red. In fact, all the constituents as well are losing in trade. So Gaurav, let's start by talking about the Nifty PSU banking index. What are you observing in this fall?
Nifty PSU Bank Index recently bounced from its Delhi lower Bollinger Band towards the Delhi upper Bollinger Band, and from there it has now come down towards the middle band, which is nothing but the 20 daily simple moving average. And in terms of Fibonacci retracement, it has retraced so far 50% of the recent rise and can come down to 61.8% retracement mark, which is around 2420. So I am expecting the index to form a base in the range of 2450, 2420, and once the base formation is done, the index will be poised for the next leg of the rally on the upside. And in terms of stocks, I think SBI, BOB, Canara Bank will be some of the buy on dips candidates to watch out for.
That they will be. The Nifty PSU banking index now losing more than 3% in trade, and within that index it's SBI really where investors seem to be pressing the sell button. Soumya, the big trigger is that downgrade from Morgan Stanley.
Well, yes, and that has put the stock under massive pressure. We are seeing selling momentum coming in the stock. Morgan Stanley has downgraded SBI to equal weight, stands with a target price of 330 rupees per share. Well, they believe the company is and the bank is actually facing some amount of asset quality issues and uncertainty out there. In fact, even though they have raised their FY 21 to 22 EPS target estimates by over 5% each, but they still believe that given in the BFSI space, the private sector banks continue to be better placed compared to SBI, and they see a better EPS progression as far as the private financials are concerned. They in fact see limited upside for SBI from here on, and in fact, and on back of this note, we're seeing the stock reeling under massive pressure.
That it is 288 for State Bank of India as we speak. But on the flip side, you do have one sector that was a little resilient, though that too has slipped in the red, and that's energy. Reliance Industries in particular is something I want to flag off because this one has continued to gain for the second day despite the market being weak. So it's another 0.8% of gains that we are seeing on the energy major. It's trading at a 1 month high, just about close to that 1 month high of 1288 rupees. Remember, we did have Morgan Stanley yesterday maintaining their overweight stance. They placed their target all the way at 1469. So it's almost a 200 rupee upside potential that they are observing over here. In fact, RIL is among their top picks in South Asia. Furthermore, we did have some negative news this morning, and that is that the deal with Amazon for Reliance Retail may fall through, but nevertheless, the stock seems to be unperturbed for now, still gaining around 0.7% in trade. Varun, yesterday the Nifty Media Index was the big loser. Today as well it is, but that's primarily because of Dish TV. However, despite whatever we've been talking about, the kind of troubles that the SL group has found itself in, Kotak still has upgraded it. So what's the rationale?
Yeah, Mabina, as you rightly said, Kotak has upgraded Z to buy from reduce with a fair value of 365 rupees a share. Now, the target price implies a valuation of 17 times FY21 earnings. The sharp correction in the stock price that we've observed in the recent past has been on account of pledged shares. Now, as this correction has come in, it presents an opportunity to buy a good asset with solid profitability at a really good price. Also, valuations are compelling even after factoring in certain uncertainties, according to Kotak. So that seems to be auguring well for the stock today.
Okay, 282 for now for Z Entertainment. It's up the day's high, now left with gains of only about 1%. Gaurav, another sector that's really resilient between yesterday and today's fall is the IT sector, and within that TCS continuing to bounce back from those lows. 2080 for TCS. Do you believe that this one could go further higher?
Yeah, that's right. IT index is witnessing recovery since last couple of sessions after a sharp fall. And similar is the case with TCS. TCS had a strong resistance in the range of 2280, 2300, where it faced resistance multiple times in the recent past. And this time it faced sharp sell-off from those hurdles. And nevertheless, the fall got support near 61.8% retracement of the December to August rally. And from that key Fibonacci level, the stock is now recovering since last couple of sessions. So the recent low, that is 1975, will now act as a strong support for TCS. And going ahead, I'm expecting the recovery to continue and the stock can head towards its crucial daily moving averages. So the short-term target on the upside will be 2160.
All right, 2160 is the short-term target. There is still some more upside potential that Gaurav does observe in a TCS. Well, from TCS to TVS Motors, the auto pack is certainly a weak a sector today in trade. But for TVS Motors, there's the additional pressure coming in because of Morgan Stanley's note. Now, they have maintained an underweight stance on, the stock with the target price of 326 rupees from these 400 levels or that it's trading at currently. Now, the rationale behind this underweight stance is that they believe that the share price will fall perhaps a little more compared to the index and that there is high competitive intensity in the two-wheeler sector. Additionally, the risk-reward ratio as well at this juncture looks pretty unattractive to Morgan Stanley and hence they've maintained their underweight stance, target 326 rupees. Stock price is well down more than 4% in trade. But again, if we just take a brief glance at what the Nifty Auto at this point of time is doing, all the stocks are in the red, being led by auto ancillary major Bosch, and TVS Motors comes in close in the heels. That one too is losing almost 4.4% in trade. All right, let's move on and talk about a small cap stock, that's PTC. Soumya, what exactly is the ET report suggesting here?
Well, this one's focusing on the core business and in fact has plans of offloading their entire or majority stake in two of its subsidiaries, namely the PTC Financial Services and the renewable energy firm PTC Energy. Well, they're looking to raise close to about 2,000 crore rupees from this stake sale. But what the exact developments are will be clear once the company comes out with this on their press releases and on the exchanges. But as of now, the stock's definitely gaining on the fact that they'll be focusing and shifting from the non-core activities to focusing on just the core businesses.
All right, 4.5% higher for PTC. In fact, the entire group, even the smaller company, PTC India Financial, is gaining almost 7% the last time I checked. So this entire group is buzzing. For now, of course, it's an ET report. Okay, Varun, earlier this morning, we were talking a lot about Vinati Organics and the entire China factor. So what exactly is that play for the stock and the sector as a whole?
Well, Vinati is an export-oriented company. 73% of sales come from export. Now, they are a bit of an outlier in this case as they have, majority market share in two products. So compared to another company which might have a lot more products, might see a lot more advantage from China going offline, but Vinati will also see some advantage. It's also going to see a huge benefit from the tax rate cut, being one of the companies that pays tax to the T at 35%. That extra 10% relief should all go well for the bottom line and enable them to do capex with borrowing less and relying less on growth. So all in all, very good news for the company in general and for the sector as a whole, because you asked, Indian chemical companies should see a tremendous upswing in the coming years just because of the repetitive slowdown and curtailment of operations in China due to pollution. India's pollution norms are a little tighter and the companies have already established infrastructure for ETP and things like that. So as China's competition becomes less due to pricing pressure, India should eat the market share from them.
All right. Well, for now, Vinati is left with gains of only about 0.25%, quite a bit, substantially off the day's high. Okay, Gaurav, Kotak Bank, in fact, the entire private sector bank today is is trading weak. Today, we have Kotak, ICICI, Axis, HDFC, all of them are losing. But for Kotak, we're seeing a lot of volume activity as well. I think it's 3 times the last 20-day average. So what is it that you're observing and what would you recommend traders do?
Yeah, Bank Nifty in general is witnessing profit booking since last couple of sessions. It has come down to fill up the gap on the Delhi chart which it had left recently. So on the downside it has a support in the range of 29,500, 29,400 and buy on dips should be the strategy in case of Bank Nifty, and similar strategy can be adopted for Kotak Bank as well. In terms of wave structure, it is forming wave 4 correction and wave 5 on the upside is still pending. So one can initiate a fresh long positions in Kotak Bank in the range of 1570, 1560 with stop loss placed at 1530, and on the higher side short term target will be 1652.
All right, it's still a buy. 1652 is what Gaurav is watching out for when it comes to Kotak Bank. Okay, here's a stock we don't talk about very often, but you cannot ignore the kind of move that we are seeing today in trade, and that's small cap pharma named Morepen Laboratories. It has fallen almost 17% on an intraday basis. This after SEBI has banned the company from accessing the securities market for a year. In fact, they're also restraining the company from buying, selling, or otherwise dealing in securities, either directly or indirectly in any manner, mutual funds, etc. All of that is now restricted for Morepen Labs. The company, however, does believe that it's not going to have any impact on, its business operations, etc. Remember, itself, it is, obviously listed on the exchanges. And the company also clarified that the GDR matter pertained to the year 2003. It was settled by SEBI on 24th September. So that's really the matter at hand. It's a small cap stock. Big fall seen in this one, 17% as we speak on SEBI's restrictions, 1830 for now. All right, we're done with 10 stocks, so let's just take a look at the RWI small case and see what that one's up to as the market succumbs under selling pressure. We are down by almost 1%. Remember, even all that news with respect to India, China, US, China, India, US, all those trade war terms being negotiated still really failed to lift sentiment of sorts. 0.5% down for the RWI small case. So still doing a bit better than what the Nifty and the Sensex are doing, but definitely in the red. But 7 lakh PMC Bank customers are struck with panic as lakhs of their rupees are stuck in PMC Bank. On the Money Show yesterday, we caught up with Sandeep Parekh of FinSec Law Advisors and Mukesh Jain, the founder of Mukesh Jain and Associates, to understand what's the way out for customers, what will happen to their money lying either in a savings account, a current account, or fixed deposit accounts. Listen in to an excerpt of that conversation.
Loans are given for a longer period of time, car loans 3 years, mortgages maybe 10 years. So the loans are, there's always an asset liability mismatch in a bank. So I think to stem the kind of a sudden run, I think RBI has imposed this, which is a temporary measure. If things go out of hand and really the bank actually collapses, again that's banks have collapsed in the past, but depositors have always been bailed out by RBI / central government. But assuming the worst, that this is the first time that it actually kind of doesn't honor its deposit payments, I think at that stage it becomes the default case of default and the insurance will kick in. So it will not kick in before the time there's a kind of more formal declaration of insolvency. Whatever interest is accruing will continue to accrue it. I don't think there's any moratorium or something of that sort. So at whatever point, the only restriction is on withdrawing money from the bank, so which applies to both FDs and to savings accounts. So she will not be able to withdraw the amount, but at the same time, the amount hopefully will be safe because of as I mentioned, historically the depositors have always been protected. Plus, there's an insurance for at least 1 lakh of that amount. And secondly, whatever interest accrues has not actually stopped, so this account will continue to earn interest.
The bank is systemically too big to be left to itself.
Okay.
So therefore, the prospects of the bank going in liquidation, they are as good as nil. Though there have been cases in the past, like Madhavpura Cooperative Bank,
yes,
going in liquidation, but those are few and far between. A big bank like this, with a good asset base, and probably erosion of net worth and liquidity mismatch, they are having the present difficulties. So this bank is likely to be amalgamated with a bigger bank, with the permission of the RBI. So that process once it starts, it will automatically take care of the interest of the depositors.
Well, that was the big topic of discussion yesterday on the Money Show. But what do we have lined up today? Well, we are going to carry forward yesterday's discussion. We wanted to talk about what to do once you have filed your income tax return, but it has not been processed by the IT department. And also, we will be taking forward the conversation when it comes to the PMC Bank case. All of this lined up on today's edition of the Money Show. So tune in today at 5 p.m. Quick break. When we return, we will be continuing with the countdown of the big movers and shakers in trade. Welcome back. You're watching Market Fatafat on ET Now. Let's quickly continue with the countdown of movers and shakers. And Soumya, Kaveri Seeds, the buyback intent had been announced. What are the details now?
Well, and this one has definitely jumped on the back of this buyback news. They're buying back actually 28 lakh of shares for a price of 700 rupees per share. With this, the total amount that they'll be shelling, the company will be shedding off is 196 crore rupees. And this definitely is cheering the investors in the street right now, and the gains coming about 3%.
All right, 2.9% higher for Kaveri Seeds. 700 rupees is the buyback price, so offering a decent, difference from the current market price. Okay, Varun, you're flagging off the pharma stocks in general. What exactly is it that's making this one a big newsmaker?
So there was a US FDA warning on ranitidine as a compound, which we heard about yesterday. Now, ranitidine is a household antacid. Like, I'm sure in everyone's household they've heard of brands like Zantac, Rantac. All these contain this as an active ingredient, and they've been sold for decades. You know, my grandfather, like really elderly people, have also consumed this drug in India. So to find carcinogens in this drug at this late stage is a bit alarming. Now, studies are still pending, and there haven't been any recalls, and there haven't been any halt on sales of these products, but it might be that now you can only access it with a prescription. So overall, many pharma companies make it. There should be some revenue impact. As in when the developments come in from US FDA, we'll be able to assess exactly what the damage is on which stock.
Well, yeah, it's quite a common drug, Rantac, essentially, and that does have ranitidine. For now, of course, it's just under the lens, no official announcement, but be wary, of the pharma stocks in general on the back of this warning. Okay, stock number 13, Titan. HSBC has upgraded the stock to a buy. Target as well has been upped from 1200 to 1450 rupees, as they believe that this company is a long-term structural winner. As we know, the big bet on this one is that it's going to be able to gain very smartly the share from the unorganized market. The valuation as well, according to them, is pretty appealing post the recent fall, but the stock has completely given up all those gains and is in fact in the red, deeply in the red, losing more than 1.25%. Interestingly, Gaurav, here's another retail stock, and this one, despite being a new listing, has managed to beat the market cap of Titan at 1898 now. Gaurav, for DMart, what more are we looking at?
DMart has been in an uptrend from short-term as well as medium-term perspective, and it was moving up along with its crucial daily moving averages. And recently, it has taken a massive leap on the upside and has increased the angle of ascent significantly. Even in terms of wave structure, the stock is forming wave extension on the upside, which means that the rally is not yet over. And on the higher side, now the subsequent targets are placed at 1997 with possibility to extend towards 2088.
Okay, 2088 and 1997, these are some targets that Gaurav is watching out for. Soumya, for DHFL, what's the latest news now?
Well, SBI has approached SEBI to seek one-time exception for mutual funds over a rule on segregation of assets so that they could be a part of the overall resolution process that is being worked for at DHFL. Well, lately we had seen that lenders and mutual funds were unable to come on a consensus, but now since that we have a meeting tomorrow, we may expect some amount of resolution given they're really speedily working on coming out for a resolution plan for DHFL. Talking about the stock performance, we're seeing the stock react on this, gaining close to about 6%.
Well, yes, 48 right now for DHFL, gaining 6%. Varun, another chemical stock that's fine, Organics, 52-week high for this one.
Yep, 52-week high for Fine Organics. IPO'd earlier last year. It's been a very well-performing IPO. I think the valuation would be close to almost double in what it listed at. It's approaching that $1 billion mark, which is a huge move. Now, there's very limited competition in the sector in which it operates. I believe there's only 4 other comps globally and domestically, very few players that can mimic this product. All the IP and process development is done in-house. Relatively low debt company, growing very well, and it's also closely linked to consumption. So with all the relief measures being announced to boost consumption within the economy, these are food additives. They go into biscuits, cookies, all kinds of other household food items, mainstay. So they should see significant traction and volume growth. Expect good things from this company going forward.
That's a massive 9.5% rally that we are seeing just in today's trading session for Fine Organics. Okay, stock number 17, HDFC Life. Now, UBS has maintained a neutral stance, but they've upped their target price to 580 rupees. They believe that the monthly premium trend, which as we know has been great, for UBS has been beating their expectations as well. And that the margin will continue trending higher on a year-on-year basis. So that's the reason why from 470 earlier, now the target has been up to 580 rupees. Okay, Gaurav, let's move on quickly and talk about IDBI Bank. Again, a stock that had really been hammered out of shape, but yesterday and today seen a great rally. Okay, sorry, Gaurav, just before we go across to you, MOS Finance, Anurag Thakur is speaking on the PMC Bank crisis. Listen in.
We'll look into that and we'll update you about the decision taken.
सर इस तरह के डिसीजंस जो लिए जाते हैं खासतौर पे नॉन कंप्लायंस के आधार पे होते हैं तो आपको लगता है कि बैंकों को अपने कंप्लायंस पूरे करने होंगे नहीं तो आने वाले समय में और भी बड़ी कार्रवाई हो सकती है जिस तरह से ये हुई।
देखिए आवश्यक है जनता का पैसा है कंप्लायंस बेहतर हो सुनिश्चित करने चाहिए लेकिन आम जनता को कहीं पे तकलीफ ना भी हो ये भी हम सुनिश्चित करेंगे।
तो सर 6 महीने तक जो 6 महीने तक जो उन पे बैन लगाया कि 1000 से ज्यादा वो विड्रॉ नहीं कर सकते तो उससे लोगों को खासकर
मैं इस पे अभी सिर्फ इतना कहूँगा कि मुझे कुछ पब्लिक रिप्रेजेंटेटिव्स ने भी कुछ लोग जो इससे प्रभावित हुए उन्होंने भी इसकी जानकारी दी है और इस पे बात करके ही आपको अगली जानकारी दी जा सकती है। ये निर्णय आरबीआई के द्वारा लिया गया है।
गोल्ड मॉनेटाइजेशन स्कीम
तो सर इसमें फाइनेंस मिनिस्ट्री का क्या
परफॉर्मेंस इतना अच्छा नहीं रहा 15.5 टन ही आया है जो कि करीब 0.2% है हेल्ड का तो क्या उसमें और अच्छा बेहतर
एक आपने बोला था पीएम बड़े कीन है क्या कुछ बदलाव की उम्मीद की जा सकती है।
मैं केवल आपसे इतना कहना चाहता हूँ भारत ज्वेलर ऑफ द वर्ल्ड बने इसके लिए इंडस्ट्री भी बहुत कीन है और सरकार भी चाहती है यहाँ से ज़्यादा एक्सपोर्ट हो और उसमें क्या बदलाव हो सकते हैं क्या सुझाव इंडस्ट्री के हैं वो भी आज सुनने को मिले।
Okay, but with that we are out of time. So Gaurav, Varun and Soumya, thank you for joining us and we will be joined by Pankaj and Karania for Markets at Noon after this short break.